I'm Chris Preston.
I'm Brad Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network, which has been delivering investment advice for more than 55 years. Brad, before we get to a busy day, you just threw out this little tidbit right before we recorded. I've started trying to learn Polish.
Yeah.
Give me your best Polish word sentence that you've learned.
Uh, Czech Yaksimas. Czech Yakshimas. It's a hard line. It's like, hi, how are you?
Hi, how are
Uh,
you? Czech
have you-
Yaksimas. Okay. Um,
Taksobia would be so-so.
Taksobia. Why did you start trying? Oh, wait, are you going to Poland? Can't remember. You
We are
started
not.
randomly trying to learn
We are
Polish.
not. But after some like genealogical research, we have found that we appear to be eligible for dual citizenship in Poland.
Really?
Yeah. So, because of the timing of how my great grandfather came over and then the timing of the birth of my grandmother. So, we're actually working with a service provider in Poland, a law firm over there to become dual citizens so that my kids can go to college in Europe. So,
Wow.
if they want, they can go wherever they want, but I would prefer Europe. Tuition there is way cheaper for EU citizens.
This, this leans right into your multiple abilities narrative that Jacob Mintz I know loves the Renaissance man qualities. But yeah, that's good for you. I love that for you.
Well, like the language learning thing is interesting to me. Like I'm really bad at like four languages, but then I'm pretty good at two. Or no, I guess I'm really bad at like three languages and I'm pretty good at English and Spanish. Uh, I don't know. It's one of those things you just pick up like some language learning apps and you just practice and you read about it. It's a good like 15 minutes a day kind of downtimey thing. Uh, my Japanese has deteriorated to effectively useless. My German is only as good as the like English language equivalents, but I don't know. I like language learning. It's a hobby.
I made the mistake of taking Latin all through high school and then in college. I should have branched out.
You should just learn Spanish. It's
I
like
know it's time. Oh, in Vermont, not a whole lot of Spanish speakers here, so French would be the one.
French. Yeah.
That my wife is learning that. She's doing a pretty good job of it. Because yeah, anytime we go into Canada, it's useful. Montreal in particular. But I digress. Tell
Yeah.
people what we're going to talk about today.
We are going to talk about negative GDP print, of course. We are going to talk about some big tech earnings. Four of the Magnificent Seven came out and reported in the last week. And we are also going to talk about rumors that Tesla is open to a new CEO. And then after that, we're going to be joined by Clif Droke to talk about what he's seeing in the market and probably talk a little bit about gold and metals. That is one of his areas of expertise. Before we do that, though, Chris, it is your week to defend the hottest take you can think of this week. Bitcoin to new all-time highs this month. You have 90 seconds. You may begin.
Okay, so as we talked about ad nauseum on here, Bitcoin. So I think both of us is purely a bull market play. Well, the bull market, at least in the S&P, never totally went away. The Nasdaq and small caps hit bear market territory earlier this month, but S&P hung in there for by the skin of its teeth, and now it's clearly making a push. Up more than 10% from the lows. I said a few weeks on here ago on here that I think it was in my defend the take that I thought that you should buy in May. I thought that would be the beginning of the next big push, and actually really started in the last week or two. I think May's gonna be good for the stock market, so I think it'll be good for Bitcoin. Bitcoin right now is already up from 76,000 at the lows earlier this month to 97,000 now. It'd only take another 8.5% from here to get to new all-time highs. Be over what is 106,000 was the at least the closing high. So I think it'll get there this month. I think stocks will do well. I think Bitcoin will do even better, as is usually the case. They hit the post.
No, you got like 10 seconds left. Keep going,
Oh,
bud.
okay. I'll keep going. Bitcoin up 4.75% year to date. So, 8.5% from here would, double that in a month. So that's a bit
Okay,
ambitious.
time.
It's ambitious, but was time for a little bit hotter take, I think.
Yeah, I mean it's like aggressive, but it certainly it we we had talked about I think Bitcoin sort of decoupling from the dollar. I don't remember if that came up on the podcast, but definitely wrote about it. Um, Dollar weakness, like the dollar is down like 10% in the month of April, and Bitcoin has been moving more as an opposite of the dollar than it has
Yeah.
at least in April than it was as a market asset. So I think that there is real value that's sort of trade war independent. Like it doesn't matter if the US is picking a fight with China or Europe or whomever. Um, if there's like a relative weakness in the US dollar, it seems to be really good for Bitcoin. That could be an issue. I mean, we'll sort of see how trade develops and agreements show up and what have
Yeah.
you. But um, yeah, it seems to be like a good time for Bitcoin. Although
I'm not
anytime
saying I love it beyond, you know, the next month or two, really. I'm just saying I think it'll hit all-time highs, which again is only 8.5% from here.
yeah, market. I like it.
Yep. Okay. Well, let's move on to our big three. Let's start with GDP. Negative this week, minus 0.3%. There's some asterisks there, or qualifiers, I guess you'd say. Big reason for that is imports, knowing that tariffs were coming. A lot of companies upped their imports, sort of front loaded their imports before tariffs hit, and that weighed on GDP. I think core, you probably have numbers, but I think core GDP was about as expected. And so I think after a few hours of panic, I mean, panic's the wrong word. The market was down, what, 2% or so in the first
Yeah.
few hours after this came out on, is it Wednesday?
Yeah,
Tuesday?
it was on the 31st or
Okay.
30th.
Yeah, so Wednesday. The market ended up for the day. And, I don't know if that was just digging into the numbers and seeing, okay, so there's some like qualifiers here. This doesn't necessarily mean we're headed for a recession. Um, or if it's just that the market has reached a point where it actually has momentum where it's a little bit more Teflon than it was, well, a lot more Teflon than it was a few weeks ago. I don't really know. But it's noteworthy that GDP was down. We had this in, was it 2022, where there actually were two straight quarters of negative GDP, but the Illuminati Council that convenes to say whether it's a recession or not, did thumbs down. So we'll see in the next quarter when tariffs may or may not hit. At least they will in China, it seems. So that could be more telling. But for now, I don't know that it's a reason for panic.
Yeah, I mean like one item on the performance on the last day of the month. It's also 401k day. All the 401ks buying up at the end of the month. That provides a little bit of a boost. You
Yeah,
tend to see that reflected in the end of day spike. We got that. Like I think the S&P was up like 30 extra points in the last 15 minutes, something along
yeah.
those lines. But
That's your last
the
15 minutes theory that, or maybe not theory, data supported argument
yeah,
that, yeah,
most of the volume is at the open and the close.
yeah,
It's like a third each. It's like an entire trading day is like a third of your volume, and then last 15, and then the opening print is like the other 30% respectively.
right.
Um, yeah. So GDP though, like economists were looking for 0.4% GDP growth. There were the big thing was imports, especially like gold imports.
Yeah,
The Atlanta the Atlanta Fed GDP now, so they're sort of real time short term GDP predictor. Um, their forecast was down 2.7%, but they also rolled out a gold adjusted model because a lot of that was gold imports, at least earlier in the year when gold was flying high. Um, when they rolled out that gold adjusted model, that was only a 1.5% decline in GDP that they estimated. The Atlanta model is fast and loose. Most GDP estimating models do not update monthly. They update data like quarterly, or I'm sorry, they update data like monthly, and then they are sort of reliable on a quarterly basis. The Atlanta model is playing fast and loose with whatever data sources it can get, so it tends to be really wide ranging.
Hmm.
A couple of things showed up. Federal government spending down 5.1% was, I mean, essentially the difference between a flat and negative GDP report. That was 0.3 of a percentage point, so 0.3%. And there was also a slowdown in consumer spending, but the big thing was imports up 41.3%.
Yeah.
It's, I mean, unfortunately, we're just seeing people wait, the market sort of waiting with bated breath. Right? It's people start front loading, they buy up in anticipation of the tariffs, and it's tough to say whether that is masking what might be more weakness under the surface. A lot of manufacturing indicators are weak, and I mean, maybe the tariffs are a non-issue in a week. Maybe we've got
Yeah.
more clarity, and it's a big draw on economic growth. We won't know until sort of the rubber hits the road.
Yeah. And we've been talking about sort of the dichotomy between the hard data and soft data, with investor and consumer sentiment at multi-year lows, um, and the calls for a recession rising to sort of a fever pitch. But then we keep getting, for the most part, we've kept getting, pretty good data in terms of earnings, which we're going to get to. Been really strong this quarter for the most part. Um, and GDP up until now had been resilient, but this is the first quarter of negative GDP. But even this has so many qualifiers that it's hard to read into it
Yes.
because of all the tariff uncertainty. So, and then today the jobs report that came out, more jobs added than expected. Down from the previous month, 177,000 jobs added versus 138,000 expected. Unemployment held at 4.2%. So like all the backwards looking stuff to last quarter. Well, now this is a last month thing. So like in the tariff riddled month of April, the hard data is still for the most part hanging in there. Um, so I mean that leaves the Fed in a tricky position as we keep hearing. But so far it's still, this is not a red flag. I wouldn't say that says like, okay, see, the tariffs are, as much as you feel that tariffs are gonna, derail everything, which it sounds like they would, but like you said, that could change in a week, whether the degree to which we're getting tariffs at all, that changes literally by like the day.
Yeah. Yeah, I think the market is sort of reflecting that
Yeah.
as accurately as it can. I mean, we came into the year at essentially all-time highs. We peaked in mid-February, and then the market started grinding a little bit lower just because we were priced for perfection. And then the tariff liberation day announcement brought on a ton of volatility, and we are started essentially pricing for a worst case scenario or trying to suss out what the worst case scenario is.
Yeah.
And now the worst case scenario seems to mostly be off the table, at least in the eyes of the market and bond traders, importantly, right? Like the bond market is no longer breaking. So now we're sort of moderating and trying to find what our expectations should be for like Q3, right?
Yeah.
Like market looks forward 6 months. So what are we expecting in Q3? And unfortunately, a lot of that is really dependent upon price of goods and how is that going to squeeze consumers? Is it going to squeeze consumers? I,
Yeah.
I mean, if we end up in a scenario where it's like, all right, well, U.S. consumers can just no longer buy stuff off Shine and Temu because of uh, the $800 de minimis exemption because that's gone. Okay, all right, so I just get less cheap garbage that doesn't look anything like the ad did. Right?
Yeah.
There are positive outcomes to some of these unpredictable tariff processes, but I think the market is still very much pricing it in, and it is skewing bullish right now. Now that the worst does seem to be behind us, but I think we'll definitely have to lean on Cliff when we speak with him a little bit later.
Yeah. And let's move on to number two in our big three. Earnings season really hit sort of a fever pitch this week, with a lot of the big boys reporting, Microsoft, Meta, Apple, Amazon. Of those four, three out of four were pretty good. I'd say Apple, with no surprise, hit hardest by tariff uncertainty and its impact on it, the parts to smartphones and you know MacBooks and everything Apple does are potentially towards the forefront of being of tariffs. So them sort of underwhelming is no surprise. Any other earnings that really stood out? I mean, overall, were earnings have
So
been a net positive as you sort of forecast.
So we
Yeah.
talked about it this last week, talking about strength in software, right? Because they don't have inputs, right? So tariffs don't matter. But I wanted to share this quote that I saw from Bernstein, a couple of their analysts, and I gotta make sure that they get credit because I love this. Jenny Koo and Mark Schmolik said, "If you can dodge a tariff, you can dodge a ball." That was their dodgeball parody quote.
Hmm.
The companies that beat and really ran up Microsoft and Meta, they're dodging the tariffs. They don't have to worry about it. Amazon, who guided for softness in net income in the second quarter, they're very reliant on selling products from China. I mean, like obviously they make 30 billion a year or 30 billion a quarter from like Amazon Web Services. Apple said it's going to cost them an extra 900 million or something like that to import from India and Vietnam instead of China.
Yep.
Those are companies that are at the their performance is somewhat at the whims of whether or not there are going to be tariffs rolled out. Microsoft, though, best ever quarter, 13% revenue growth. They reported 346 in earnings on 70.1 billion in revenue. Calls were for 322 in earnings on 68.4 billion in revenue. And impressively for them, their Azure unit, which includes all of their cloud compute and their AI efforts, that grew 33% with half of it attributable to AI.
Hmm.
So they're they're starting to demonstrate results from the artificial intelligence driven performance of the last couple of years. That's good to see, because the narrative for so long has been AI is going to be the wave of the future, but nobody was showing earnings or revenue from it. And now Microsoft, who has never really broken out their earnings, is actually doing so. So it gives an indication that there may be a longer tail on AI than some of the biggest doubters have had, myself included. Uh,
Yeah.
Meta, similar situation, 643 in earnings on 42.3 billion in revenue. Expectations were 523 on 41.4 billion. So good quarter, beat expectations. It's I think software probably the place to be for as long as there's a bullish sentiment in the market and tariff uncertainty. That seems to be a
Yep.
good place to sort of split those two different narratives.
At a high level, earnings growth now forecast Q1 earnings growth now seen at 12.9%, up from 8.9% a week ago, and prior to this quarter beginning or this earnings season beginning, it was in the 7% range. So better, potentially much better than expected. Fueled by the Microsofts and Metas of the world this week. Netflix we talked about last week. Um, again, I feel like the second quarter will be more telling if tariffs hit. Um, but
Yeah.
this again is, pointing towards a still healthy economy at the moment.
Yeah, the tough thing for me is the efficient market hypothesis, right? Like the market knows all and it prices in everything.
Yeah.
Um, Well, you don't flip from a bull market to a bear market in like 4 or 5 weeks, like we did in February going into March and April. If you are accurately pricing in all the variables out there. So the question I have is how effectively is everybody pricing in the impact of tariffs? And the problem that we keep going back to is it's like like it's a light switch. It could get flicked off tomorrow, and then the market's gonna just power ahead. Well, if tariffs are off tomorrow, we hit all-time highs in 3 weeks, right? Like that's like a there's a path to that outcome. Um, if tariffs go ahead as planned right now, or there's not a subsequent delay in like July or whatever, and then consumers stop spending, and then businesses start laying people off, then maybe we have further depths to plumb. I am looking for mid-May. That's when we will start seeing the impact of some of the shipping shutdown that happened earlier this year on like store shelves and
Yeah.
trucking. So there are things that you can look at, but the really tough thing as an investor is either sitting on the sideline and saying, okay, well, hopefully this goes in the direction that I'm thinking it will, or buying in and knowing that there are these immediate catalysts up there. I mean, we're trading higher today. I'm cautiously optimistic that the worst is behind us, but then a lot of that is reliant on the White House making the right calls, which they don't have. Like the whole thing that got us into this mess was them making a really terrible call and doing Liberation Day. So I don't know.
That's a good transition into our final topic, Elon Musk. Um, Separate, decision making subject, I guess. But so Tesla, it was a report this week that Tesla has sought to replace Elon Musk as CEO, which he's since denied. The Tesla chair denies. Um, do you think this is? I mean, because clearly right now the thing that's hurting Tesla's brand most is Elon Musk. There's just
Yeah.
no doubt about
Well,
it. They missed earnings by 35%. 27 EPS was 27 cents versus 41 cents estimated. It had its worst quarter in what, more than a decade ever, at least in terms of growth. Um, and people are selling their Teslas. People are not wanting to buy Teslas. People are protesting Teslas everywhere because of Musk's involvement in the government. That's not a political statement. It's what's happening out there. Do you think this is more them putting this out there as sort of even knowing they're not going to do it, but that it would help maybe the share price or confirm, as Musk himself has talked about stepping away from Doge and focusing back on Tesla, which seems to have helped the share price, and them announcing they were going to replace him as CEO seems to have helped the share price a little more. Um, do you think it's something that
so,
will happen? I don't.
so it's I don't know. I like that you are taking on my tinfoil hat and like pitching the conspiracy that this is just a smokescreen to preserve the share price. Um,
I,
the,
I I I think they could have looked into it, but I wonder how. I wonder if it was half-hearted. You know?
so the reporting was that they had talked to an executive search firm. Board chair Robin Denholm said it was absolutely false, and Musk said it was a deliberately false article that the Wall Street Journal had published. I don't know. The Tesla board also voted to approve his pay package twice. So the first time and then again after it was rejected by a Delaware judge. Um,
Pre-Doge, you should
yeah,
know. Yeah,
pre-Doge.
yeah,
Tesla's board is riding the tiger. You can't get off, right? Because then the tiger eats you. Because Tesla's not priced like a car company. They're not priced as if they make revenue from selling cars. They're priced as if they are a moonshot company because you get stuff like Starlink and SpaceX, and for a while you had the Boring Company and their tunnels, and you've got like all of these little moonshot projects that Tesla encompasses. So I think getting rid of Musk would be stock price suicide. You can't do it because then the stock is only worth $40 a share.
yeah.
And, if they get rid of him as CEO, I don't know what kind of control he has over something like SpaceX. Maybe it forces Tesla to divest SpaceX if they were to actually try and transition him away from him. So there's some like internal intricacies, but they are very much dealing with a double-edged sword here. It's like, yeah,
Yeah.
his antics are getting a ton of negative press, but his antics are the same reason that the stock has been a
Yeah,
massive winner for a lot of investors.
exactly. Musk right now is both the floor for Tesla's share price and limiting the ceiling for Tesla's share price. It seems like,
Yeah.
and that could change in a few months if he does, step back from Doge, if the sort of anti-Musk fervor dies down, if he doesn't really have a government role anymore, then the ceiling probably goes back up again. But there's no doubt that his the vitriol towards him has limited how much Tesla uh, can go up in recent months. Although, you could probably say that a bad quarter did more damage than Musk's presence itself. But yeah, I don't think it's going to happen, and I think for the reasons you just mentioned that he provides he's what's propping them up to a different status from just being a car company.
Yeah, there's a world out there where Musk just is an eccentric billionaire that is like pursuing all of these moonshot projects, and Tesla's trading at like three times the valuation it's at now.
Yeah.
Where he doesn't buy Twitter, like buying Twitter. All right, there's another one. That seems like it was probably a huge waste of money, although they just sold it to their AI arm, and I
Yeah.
think that
That's where it started, the Twitter thing. Although the anti-Musk sentiment, I think, started when he bought Twitter, I would say.
yeah, I don't know, you take the good with the bad.
Yeah.
I don't know. It
Yeah,
still is.
now we're talking
It's
about other things. So yeah, Tesla specifically, I don't think either of us think they're going to get rid of Musk, and
no.
it would be a
No,
mistake.
they can't afford to. It would cut the share price down by 60%, would be my
Right.
guess.
Yeah, probably. Okay. We're gonna get to Cliff Droke in just one second. First, I wanted to mention I'll be on a webinar next Thursday. I'll be hosting a webinar that it will feature my colleague Tyler London, who's been on here a bunch of times. He's chief analyst of Cabot Small Cap Confidential and Cabot Early Opportunities. He's going to be talking at 2 o'clock. It's free next Thursday, May 8th. It is called Making Sense of Gold's Historic Move and How to Play It with Mining Stocks. Um, it's again free, and you can click or register by going to cabotwealth.com/street. Um, Tyler's really good on all things. Gold is having a moment now, has been this year. So he has a couple gold mining stocks that I know that he's added to Small Cap Confidential recently, and he's going to talk about what he sees from the sector and what he likes about it. And then also he'll talk market and small caps in general too. But again, go to cabotwealth.com/street to register for the webinar next Thursday, May 8th at 2 o'clock Eastern, and it's free. Speaking of gold, we have a gold expert coming on in just a minute with Clif Droke. We'll get to Cliff in just a second. All right, welcome on Cliff Droke, Chief Analyst of Cabot Turnaround Letter and Golden Metals expert. Cliff, welcome. Lots to get to. I want to start with turnarounds. Because obviously we're in a bit of a sweet spot now where it's when you're looking for turnarounds, you're not trying to catch a falling knife the way it would have been a few weeks ago. But while the market has turned around, we're not may not totally be out of the woods yet. But at least you have a little more confidence now that we might be headed in the right direction potentially. What areas or what sort of sectors are you looking at in particular for turnaround opportunities?
Well, there's a couple of sectors that I think really stand out. Obviously, defense. People are they're becoming more risk averse in the short term. Traders are getting they're licking their chops and they're wanting to get away from just total defense, obviously. But they're still worried about the tariff backdrop, the economic headwinds, et cetera. So, one of the biggest no-brainers to me right now is retail stores that focus on selling consumer staples. Your dollar stores, all the dollar stores look good to me. Dollar General
Mhm.
being one of them. Those to me are prime turnaround candidates right now. Also, I'm looking, obviously utilities. When people think of defense, they think of utilities. But as a turnaround analyst, I'm looking at drilling down a little more, and I'm looking at utility infrastructure companies that are coming off of a bad performance,
Mm-hmm.
and because they're supporting the data center build out, which of course is the big huge trend right now. So that's another one. Any also company with exposure to natural gas to me looks good from a turnaround perspective. And just off the cuff, I'm looking at toy stocks. Toy stocks are looking pretty good right now. Mattel just did a big buyback, and Hasbro looks good. There's the new trend apparently is what they're calling kidulting. You know, adults getting into toys from a retro perspective is becoming big.
That's right up Brad's alley.
It's, toys are making a comeback, and of course the Asian Pacific market is growing for that sector. So just off the cuff, those are some of the turnarounds I'm looking at right now.
Are you thinking that the worst of the sort of tariff threat is priced in with toy companies? I mean, like the risk that jumps out to me is that it's just going to be so expensive to import plastics, right? Like plastic toys, action figures, stuff like that from China that might be a significant headwind. But does it look like that risk has mostly been priced in already?
I think it has. I think the bad news has been assimilated in the stock prices. I mean, the future is anybody's guess, but from what I can see, it has been priced in. I don't see it as a significant headwind, and apparently, the analysts that cover the Mattels and Hasbro's don't see it either.
Yeah, that's an interesting turnaround, or that's an interesting candidate. We were talking earlier in the episode about software stocks really rebounding strongly off of that early April sell-off, explicitly because they are not impacted by tariffs. So trying to thread a needle where you're finding some of these companies, I mean that feels like a buy when there's blood in the streets kind of environment where it's like, hey, we're targeting this area that is impacted by tariffs, but we're really seeing value here. Yeah, I like the confidence that that takes.
A lot. Well, you talk about buy when there's blood in the streets. A lot of these, including the toy stocks, the short interest is off the charts right now, and it's not going to take very much to get them going. And when you've got a catalyst like with Mattel and the buybacks, that to me it brings them in, and that I think is going to catalyze the short covering rally.
Going to the market just as a whole, and you wrote in your update this morning that the market could kind of go either way. There's some positive indicators, sort of under the surface stuff that you're looking at, and some indicators that give you a little bit of pause. Talk about sort of the pros and cons from what you found.
Sure. The indicators I look at most often to tell me what kind of really condition the market is in is number one, the new 52-week highs and lows. I think historically at Cabot, we call it the 2-second indicator because it only takes a couple of seconds to look at. But what we like to see is on a daily basis when the NYSE new lows are below 40, that's a sign historically of a market that's in a good, healthy environment. When they get above 40, it means there's some internal selling pressure. And for the last couple of weeks, or going on the last couple of weeks, it's been below 40. And also the new highs are exceeding new lows finally. So that tells me the market is stabilizing internally. Doesn't guarantee it's going to continue, but it's a step in the right direction.
And that's quite a turnaround from what, a few weeks ago when it was over, I think you pointed out it was over 1,000
Yes.
that were at 52-week lows, which you said was at the time was, a total contrarian signal that usually doesn't go more than that.
No,
Anyway, sorry.
Well, in the old days, they called it a 4-column bottom because when we had to read about it in the newspapers, took up 4 columns, that's about 1,000 new lows. That's typically a bottom, and that's what we saw. The other indicator that I look at is broker dealers. The broker dealer index, XBD, is to me, it's one of the best bellwethers for the state because if people are not bullish, they're not going to be buying the broker dealer stocks, and if they're bearish, that's one of the first things they'll sell. And I've noticed that the broker dealer index has some of the most relative strength right now of all the indexes, major industry indexes. And then another one is Bitcoin, which I know a lot of your audience is familiar with that, using it as a leading indicator, but I love it as a leading indicator. It has called just about every top and bottom in recent years, and it did it again in April. It showed the one I look at is the Grayscale Bitcoin Trust ETF, symbol GBTC. it turned out before the S&P and gave a leading signal. And right now, Bitcoin is, I think looking pretty good. And so to me, that's the canary in the coal mine. As long as crypto is doing well, it means investors are feeling kind of frisky and they're somewhat risk averse.
Yeah, that was good timing. Chris just highlighted earlier today. His call was that Bitcoin's going to hit new all-time highs this month. Um,
That would only
so
take 8.5% from here, and it's up 18% or so in the last month. So it wasn't too scorching a take, but I like you, am a Bitcoin skeptic, but see its utility as a bull market play, and it usually precedes the moves in the market, it seems. And right now, it's got a lot of momentum, obviously. What are the negatives that you're seeing under the surface that could, signal that we're not done with, with the lows that we saw a month earlier? I guess it was almost a month ago at this point.
Well, two specifically. Number one, the Russell 2000, the small caps.
Yeah.
They, I don't like. I mean, they're going to lag at times like this. I don't expect them to lead. I don't expect them to take flight. They're not performing badly right now, but they're just kind of hanging in there, very close to their lows. That's a little nerve-wracking to me. Whenever the small caps are lively, it's generally a good sign for the rest of the market.
Hmm.
But the one that I'm looking at the most is the VIX. Um,
Yep.
it the I Not that you cannot always predict the market looking at the VIX. I think you can sometimes if the chart pattern is just right. But what's happening is when you get the VIX above 25, the 25 level and rising, it's not a good time to buy stocks. There's too much turbulence. When this VIX goes below 25 and keeps declining, it's usually a great time to buy stocks. It's starting to trend in that direction a little bit. So
At
uh,
22.88 as of right now, down 7% today. When you wrote that, it was like barely below 25, so it was like right on the cusp. So yeah, trending in the right direction as of this recording, at least.
if it keeps that up a few more days, I think I'm gonna do some more buying myself and in the newsletter. I've been very, cautious, so we've just been limiting our buying, but I'll go in heavier if the VIX keeps falling. And right now it's looking better.
what's your floor on the VIX that is the buy signal for you? So if it drops, is there a certain level where if it drops below, that's your green light?
Yeah, if below 25 and keeps going, especially below 20. I know our options expert Jacob looks at 20. I think in the past year or so, 20 has taken on a greater significance. Historically, though, it's 25. 25 is sort of the dividing line between bullish and bearish. Um,
Yeah.
I I want to piggyback on something you mentioned with small caps not looking great. I was just looking at the at some valuation metrics. I don't know, last week, a couple of weeks ago. Um, Small caps and mid caps are actually sort of historically fairly valued or discounted right now. Um, Anything that you're looking at, maybe from a contrarian perspective, that would have you looking at small caps more closely. I know they've been underperforming. I mean, really since like the 2022 bear market or the post 2022 recovery, they've been underperforming. But are there any contrarian signals that you might look at where it's like, okay, it's time to buy small caps?
Not so much a contrarian signal because there's plenty, like you mentioned, there's plenty of fundamentally they look fine, and there's a lot of contrarian signals for the small caps. If you look at the turnaround letter portfolio right now, there's very few small caps in there, and I think the reason is because they're just not moving. I like to see some movement, and I look at the small cap ETFs, the actively traded ones, and when they start to show upward movement in synchronization with the rest of the market is when I start looking closely at turnaround oriented small caps. Basically, the answer to your question is I need to see the Russell 2000 show some more upward movement. It's just dragging. And the small caps, when they can drag for a long time. That's more of a technical observation, but that's the benchmark I'm looking at right now. It's just the Russell 2000 itself.
Let's shift to gold, or gold and metals, which I know, that's your bread and butter, and you've been high on, and the market's been high on through the first few months of this year. Seems like it's cooled off a bit. I think gold prices are down, what, 6% or so, but
Yep.
that's for all-time highs. And still way up for the year. What's your take on gold and I guess silver and any other metals right now?
Long, I expect this year is going to be a solid year for gold.
Hmm.
A little less so for silver because of the economic headwinds, but I think silver will eventually piggyback on gold's strength, certainly longer term. I'm bullish gold intermediate to longer term. Very short term, what we're seeing is I think we're going to see more of it, some short term weakness. I noticed that the magazine cover indicator reared its ugly head this week. It showed up gold, showed up on Barron's, which Barron's is not exactly a mainstream news magazine, but anytime you see gold on the front cover of a newspaper or a magazine, that is a major contrarian signal because it
Yeah.
takes a lot to get people bullish on gold to where it starts showing up like that. And it's an overcrowded trade right now. I think it needs to cool off. And people are also selling some of their gold and going into riskier assets right now to take advantage of the rebound.
Yeah. Like Bitcoin.
Yeah,
Yeah.
exactly. Exactly.
Yeah. And just you mentioned silver has lagged a bit. Gold up about 24% year to date. Silver 10, a little over 10%. Both up, but also not at their highs. Brad, you had something?
Yeah, just piggybacking on the mention of silver, is that primarily because of concerns about economic weakness, right? I know silver is more often used as an input, especially for some of the green energy, solar cells, things like that. Is that a big catalyst for the silver underperformance so far this year?
It is. It's more of an economic metal, of course, and right now, gold, I think, is being just primarily driven by just defense, safe haven buying. People are afraid and nervous and they want to hedge. They don't typically look to silver as a hedge in turbulent times. They'll Silver is actually a little more is more speculative. And when they start feeling froggy and gold is really booming in a big way, they'll start to look at, oh, let's get some silver. It's cheaper. But right now, I think gold, the play is for defense, you buy gold and you wait for the economy to improve before you buy silver.
Good
Well, Cliff,
actionable advice.
yeah,
Thank
that's
you.
great advice. Thanks as always for joining us. You can read more from Cliff. Again, he's chief analyst of the Cabot Turnaround Letter, which is in search of turnaround opportunities, which there are many right now. Cliff has a lot of good recommendations in there. You can find that on the cabotwealth.com site under premium advisories. Cliff, thanks again for joining us. Great market insights as always. And we'll talk to you again down the road. And we'll see everyone on the next episode of Street Checks. Thanks for joining us.